An entrepreneur is someone who searches for opportunities even where there seems to be any and reaches out to meet the market's demand by using resources and putting them to best use for the benefit of society. To make such strides, a person must have entrepreneurial skills, which involve high levels of intelligence and analytical prowess to enable him or her to recognize the demands of his or her immediate surroundings. It is also crucial to acknowledge right away that there isn't a magic pill that will make you an overnight millionaire and a successful business person. However, for those willing to put in the necessary effort to succeed, there is a nearly formula combination of entrepreneurial talents that can help distinguish successful businessmen and women from the competition. The ability to take a beating and bounce back are essential traits to have if you want to be a successful business person. No matter how many setbacks and rejections successful entrepreneurs experience, they are always willing to pick themselves up and find a new way to the top. To take a business idea from the realms of the mind and turn it into a successful enterprise, this level of persistence is necessary.
Glad to know you stay with us, and very quickly we turn our attentions to earnings from select companies. We'll start with Airtel Africa, and we'll have that displayed on the screen now. And I think it's important to let us know that this information is courtesy Invest Data. And of course, this is Invest Data right here sitting beside me. Thank you so much.
We really appreciate it. We really appreciate it. Thank you, Invest Data.
Thank you.
All right. Okay, so we start with Airtel. For Airtel in 2021, the revenue was 2.27 billion naira. And in 2022, it was 2.57 billion naira. And then the percentage change there is 17.21. I think that's 17.21. And also for profit after tax in 2021, 335 million naira. In 2022, 330 million naira. And the percentage change there is minus 1.5. And looking at the EPS, that's the earnings per share. The earnings per share was 7.6%. And then in 2021, then in 2022, 7.9%. And let's also look at the profit margin, 14.98%. And then after that, we also have in 2022, 12.84%. And we have a dividend there. I think that's 2 naira 18 kobo. That's what we have for Airtel Africa. I'd like Ambrose to start that particular analysis for us. What happened to Airtel Africa? Really, I'm looking at the profit after tax, and I'm looking at even the profit margin and all of that, and I'm wondering, I'm specifically concerned about the profit after tax, really.
Yeah, actually, looking at the figure, as you just said, it's like you didn't follow the data. That's in dollars, not in naira for Airtel. Airtel is a dollar company. You can see that they're up there. Dollar, you know, they are not in naira. That is why, as you are calling it naira, I was looking at you.
Okay, thank you so much for that. I guess I'm used to naira.
Well, the good thing is that I would say that if you look at this company, like I said earlier, that they're into like a social service that you need to call anytime, any day, and with data as well. Here now, people are already screaming online, watching us. You need data for that. Their business is settled, and the good thing that they're also expanding to more countries. They already in 12 countries. I think they were tended to like 14 or 16 or
15 countries.
Yeah, it's a good one for them. That means if the more they get people into their net, can expand their business, which also we have seen on the top line moving by almost 13.2%. Or for me, it's a good one for the top. For the marginal decline in profit after tax. Don't forget that we're already globally, we're in an environment of inflationary environment, pressure here and there because of cost. It's possible that reflected on getting a PAT that does decline by 1.5. For me, that number is still very, very in order. Yeah. But now also declaring an interim dividend about 2.19 cents for shareholder for this half year. It's a good number for both investors in Nigeria that are looking for dividend yield might not be looking the way of the stock because of the high price. Don't forget that this stock has touched our size almost 2,000 before dropping to around 1,219. Yeah. Also, the dividend yield compared to what they are paying is still very, very small. The price. There are some companies already at this third quarter result that to have a good yield that people can be looking at because of their dividend will conclude faster than Airtel. Airtel has much as year end. All the March account now I'll tell you, investors are not more playing them because of what? Their payment will be from June, July, next year. People are thinking of that is why in equity investment, timing is very, very important. Like the Bible said in the book of that time and season and all that, you need to know exactly the time to invest. That means now is not the time for looking at what the March year account. Because yes, you can take this one, but people are looking at where can I get good dividend, and that is why people are selling down that such stock. But not that the bad company fundamental is bad. No, the earnings are okay, but because of timing, people are moving away to that, and also they're coming back again when they have taken the December dividend. All people will be looking at the March account again. That will be the next place to pay cash in for what? For another dividend. This is how markets play. Don't just because the number is good or dividend. You want to position for nothing what is coming in July or June. Okay. How the one that is coming in February or March. No, this is how to invest. The number for me is very, very okay.
All right, thank you so much. We'll move now to Cadbury, the Q3 2022 report for Cadbury. So for Cadbury, 2021 revenue, 30.05 billion naira, 2022 42.54 billion naira, the percentage change there 42. For profit after tax, that's Cadbury 2021 1.83 billion naira, 2022 2.82 billion naira, percentage change there 86. For EPS, 81 kobo at 2021, and then in 2022 1 naira 50 kobo. For profit margin in 2021, 6.10%, and in 2022, 6.63%. Mr. Charles, let's have your take on Cadbury's result.
Well, looking at this Cadbury report, Cadbury has been one of the a leader in the food industry in Nigeria. But of course, we know what happened to Cadbury for some period of time. Even that cost the job of their SY managing director. I cannot mention his name here now. We all, if you're in the market long ago, you know what happened, and that was because Cadbury was in the likes of Nestle, Unilever. These were peers moving together, and of course with their popular brand, which everybody takes. I don't want to mention that name. They said they come and place adverts. Yes, you can see that I am impressed because they've been having some issues. But looking at this PAT now, one will see that they are back. It is 86%. That's quite impressive. But they will have done better because finance cost was a problem. Sourcing forex was also a problem. And of course, we know the challenging economic environment. And that's why it was even particularly this Cadbury Q3 that I said we need to really congratulate our corporate managers. Because despite all the challenges, economic headwind, inflation, everything, we are seeing that these managers have been able to use the resources at their disposal to give shareholders this kind of result that we are seeing. I think they should be encouraged. And I don't want to push it too far. I would have said some of the politicians should go for some leadership training,
No, we need corporate
resources to give investors this result. Because what is the average? I talked about dividends of democracy. Yes, dividends from this corporate democracy.
Yes.
Okay.
So let these people we have elected learn from these corporate managers. The resources we have given to them, manage it, and at the end of the day, you are giving return. That is accountability, despite all the challenges they are having. So we give them kudos, I think. But again, I will always advise the management of any company to, yes, because when you are making profit, the actual profit you are making, at what damages have you done to the environment? You should take that into consideration and begin to tell us ways in which you are mitigating those climate effects. Cadbury is a socially responsible company, and I know they are doing all that, but we want them to continue to make it known more so that we will know that if the earning per share they have declared there, that is, they should take into consideration the environment so that we know that yes, this is the actual value they have added to their shareholders, including myself. Thank you.
Okay, you just put it out there. Well, we move on now to UPDC, the third quarter report. Revenue in 2021 was 614.74 million naira, and in 2022, 2.09 billion naira. The percentage change there being 240 percent. That's what we have there. And then we have a loss after tax. That's minus 1.18 billion naira. That was in 2021. And then in 2022, 290.62 million naira. The percentage change there being 75. And then for EPS, we had, well, we can say loss per share. It was minus 6 kobo, and then 2022 minus 2 kobo. I like, if you can hear me, Mr. Ajayi, I would like to have your thoughts on this result.
Well, thank you very much. On UPDC, if you look at the revenue, they've been able to grow revenue by 240%, which is very, very, very nice one, because when you compare 2021 to 2022, and also on the part of gross profit grew by 803%, which is actually very stellar. But the problem with UPDC still remains the operating expenses. Because they've not been able to manage their operating expenses very well, and also the cost of finance is actually another problem for UPDC, because currently we understand what's currently happening in the country now, and just like what everybody has actually highlighted earlier on, to raise funds now in the market is now actually double digit and also very close to 20%. Even as a company, if you are trying to raise via maybe issuing bonds or issuing a commercial paper, and I think this also impacted on their books. But when we look at it all in all, they've been able to perform better than what we saw last year. And when you compare last year's result with this year, of course they are still in the lost terrain, but they've been able to do better than what they did last year. So for us, I just feel that if they continue in this stride and try to find a way to actually minimize cost, they should be able to break even and be able to return to pay dividends to investors.
All right, thank you so much. Well, according to him, I think he also agrees with what has been said here. He's talking about, you know, the high cost of finance and also cost of production, how that it's, you know, affecting a lot of companies. And he, of course, he says that the good thing is that they are coming back, you know, they are getting better.
I think that coming back is what I know he has really touched, because when you see a company that is, you know, called a turnaround, you know, it's true to give them kudos for this company to move from about 614 million to 2 billion, having about 3-digit growth in turnover. Tells that something positive there. And also to reduce their loss from 1.8 billion to, you know, 200, tells that something is on the line for investors. That means for those that are designing investors, if you are looking for kobo stock that you don't want to take too much risk, but to know that it's risk to buy in penny stock, but since you are seeing where they are going, knowing that in a inflation environment, into those real estate backed commodity or company that you should also be looking at, we're seeing already reflecting on their top line. It's a matter of coming back to the bottom line. That means for those that are thinking long, this time start building your portfolio towards that direction, because I definitely look at what is happening there. UPDC really trust. You can see that they are seeing performance. It's part of their business again. I believe that for me, this period is where investors will look at that way. Especially the price is low now. When the earnings turn positive, the same market to prices. That means if you're a long-term investor or medium-term, this is a way to start looking at that stuff, because they are giving a signal already where they are going. Despite in this inflation environment, also cost of everything we are seeing going down, cost of fund, everything they are seeing. And also don't forget that after the election, they're about to be reformed, and reform also bring kind of support to different sectors of the economy. I think this is the right time to start looking at the work of that company. All
right, very quickly, let's take this final one, and that is industrial medical gases, the Q3 report for industrial medical gases. So for 2021, we saw 2.76 billion naira revenue, and in 2022, we saw 3.81 billion naira revenue. The percentage change there being 38.04. For profit after tax, we saw 322.37 million naira in 2021, and in 2022, 359.49 million naira. The percentage change being 11.51. And then for earnings per share, for the earnings per share in 2021, 77 kobo. In 2022, 86 kobo. Then for profit margin, 11.59% in 2021, and then in 2022, 9.45%. Let's have your thought on that, Mr. Charles.
Well, looking at this company, industrial and medical gas, I think I could remember very well. It used to what we call BOC gases, exactly, somewhere along Oshodi Road. Yeah, so it's a company that's been well run. Then when they came for facts behind the figures some years ago, and they were able to tell us the challenges they were going through, that, do you know that even before COVID, they were supplying medical gas to most of these teaching hospitals and Federal Medical Center, and they are being owned. And they are saying because this is life-saving commodity they are supplying to these hospitals, they will not say, okay, no, we are not going to supply you again. So they supply them, and they had so much debt to collect. So that was a major concern when they were doing facts behind the figures. And if you also look at it, they are also involved in industrial gas too, which they have made a lot of safety literatures, because it is very, very important for people consuming this gas. And we know what gas explosion has been doing, you know, and that's why you see a lot of roadside people who are dealing on this. So they are saying they're already pushing for the government to create a regulation where you will not have this kind of roadside people who are dealing in that, because it is very, very dangerous. Looking at their numbers, yes, I think they have they've done quite well, at least because there are a lot of competitors in this business too.
Yeah,
a lot of competitors. So doing this kind of profit after tax about 11.51%, I think that's quite encouraging. Let me now go and look at the earnings per share. So that means they have 86 kobo. So I will employ them, you know, every shareholder, no matter whether it is short term, long term, whether they are fundamentalists, technical analysts, at the end of the day, it's a return.
Yeah,
they are looking
investment.
For. Yes, return on that investment. So with 86 kobo earnings per share, I expect them to at least see how they can compensate the people that they have used their funds. The shareholders who stood by them, they should get something to compensate for all that they have done. So I think the industrial and medical gas should try and see how they can pay out at least 50% of that earnings per share.
50%.
So, yes,
and this is just Q3.
This is just Q3.
You are likely
so
to
you can see
like 1 naira or 1
if I'm an investor now, I'll be looking at that. I say, okay, at least from Q3, this is this. I'm sure that they would end of the full year, something definitely will come. So I think we'll give them kudos. But again, they impressed me because on that day when they came, they were able to show us their blueprint in terms of how they are operating sustainably. Okay. In terms of the environment, because they know they deal with a lot of, they put a lot of gas.
Yes.
Even gas for welding,
a
lot. Yes. So in terms of safety of the environment, safety of their workers, because it is key.
Sure.
Your workers are your most valuable asset, and working that kind of volatile chemicals in their factory or in their laboratory needs a lot of care and safety, because we don't want to lose Nigerians while working in that place. And they took us even on the factory visit. We were able to see the safety gadget they put in place. I was impressed with this company. I said, yes, sustainability is coming to stay. Safety of workers is coming to stay. And this is what we want to encourage, because situation where you will see Nigerians working in a factory in very, very degrading conditions. And when there are industrial accidents, you don't see the people taking immediate action. And you see workers losing their limbs and all that. We don't want that. As long as you are in Nigeria, of course it's a Nigerian company, and I know they have international affiliation, you know, and of course a son of the soil, a Nigerian, has bought over 60% of this company. Of course, I'm not going to mention the name here. We know that, yes, it's a Nigerian company full, and of course, the service they are doing, I'll continue to encourage them. Supplying medical gas, oxygen, to take care of dying patients in the hospital is key for the survival of this patient. So I think, well, I don't want to go spiritual, but I'll say God will give them the grace, the wisdom for them to continue the good job they are doing, and of course, they will do better next time when we are looking at the full year.
Okay, that's fine. I think that's a good one. Very quickly, your final thoughts while we close.
No, actually, I would say that the Q3 number, either half year or first quarter, we can see that numbers are coming impressive. I will encourage investors this time for them to do their due diligence. Look at stock that has potential to pay a good dividend, and that position, that's the way to go. The market has all it takes to make you worthy.
All right. Mr. Ajayi, let's have your final thought. We've talked about a lot of things, really. Just, I think for you, I'd like you to just talk to us generally about maybe the fixed income market. What's happening in closing?
Yeah, for fixed income markets, we saw what happened during the week where the central bank and in collaboration with the DMO issued treasury bills, and we noticed the 1 year paper closed around 14.5. That's the discount rate. So when you look at the effective return, it's about 17%. So the concern now is that I think this is negative for government in terms of raising funds in the market, and also not so good for corporate as well, that needs to actually raise short-term funds in the market. But on the part of the investor, it's a very nice one for investors, but it means that it simply means that the negative real return is actually taken out, and will likely lure people to actually into the market now.
All right. I think this is a good place to end. I mean, we're pressed for time. It's a good place to close the show. Thank you so much, Mr. Oladipo Ajayi, Head Fixed Income, Chapel Hill, Denham. Thanks for coming on the show.
You're welcome.
All right. Well, thank you so much, Charles Pakroha, for coming on the show also.
Thank you. It's always a pleasure.
Absolutely. Thank you, Amber Somodi, and thanks again for the data. Courtesy Investing.
Thanks for having me here.
Thanks to our studio people too. They did a great job.
Well, that's all free for today, and many thanks for watching. My name is Perpetua Fasami Peter. Enjoy the weekend. Bye for now.